Okay, I'm gonna show you. I'm gonna show you the checklist. You can find it. Hold on. What happened?
So I'm good. Oh my god.
Wait, hold on. Okay, here. It's better. Let me see if I can get this. Yeah, yeah. So yeah, for example, okay, if you're looking at the checklist, let's look at the checklist. So if you're looking at the checklist, let me just get it here. So here's the checklist, right? Okay, what does it say if you're taking a short, right? Here, high
Yes,
probability
coach.
style short. What does it say?
Pattern confirmation ensure there's a lower high pattern.
Right? Which
EMA alignment should 55 EMA mid-band loose high and is below the 233 EMA Heiken Ashi.
okay, you understand what that is?
Yes, that blue line, coach. That
The blue line is basically the mid band of the Kelton channel.
coach. Yes.
Okay, so I'm looking at your trade here. Let me put this checklist somewhere here so you know what it is. Wait, let me see.
All right, coach.
And we can look at the chart at the same time. That's why I'm surprised you're taking trades already. I just wanted you to do the exercises first so you can get used to what you're looking at. So
Uh, that's a sim account, coach. So
yeah, I know.
yeah. Okay.
Let me see here. Okay, so okay, let's look at the trade you entered, and you can look at your checklist. We'll discuss the checklist while I'm looking at your trade. Okay.
Yes, po, coach.
Okay. So you took this short, and according to this, high probability short entry, high probability one, the pattern confirmation, which is what lower highs. So yes, so there's your lower high. It's basically doing your lower low, right? And you have to beat the price has to be the 55. This one, the 55 EMA, the blue, right? Right?
Yes, coach. That's the one
Has
that
what does
I
it
saw.
say? Right. What does it say
So
there? 55 EMA is below the 233. Where's
yes,
the
coach.
233?
So that yellow broken line, right?
No, that's
Ah.
that's a 21. Read it. What's a 21 EMA? Yellow dashed line. The 233 is the Heiken Ashi, which is this one.
Oh, so I made mistake there. Okay, coach. Yes.
Make sure to know because we haven't discussed this yet. What these indicators are.
Hmm.
That's why I was surprised you already taking trades because we never really discussed this yet. Well, I'm going to get to the point where we discuss each of these individual indicators, so you know what you're looking at. Because right now you don't even know. You thought this was a 233 up here. No, that's a 21 EMA.
Mm, okay. But
Yeah,
the blue line
more
also
advanced, more
Keltner, right?
what?
Keltner channel.
What about it?
The blue one.
No, that's the mid band.
Ah, that's the main line.
This whole thing, the upper, the lower, and the mid band is the Keltner channel.
Okay, good, got it.
The blue line here is a 55 EMA, which is the mid band of the Keltner channel.
Okay, there you go. So I misread it. Yeah, thank God.
Yeah, we have. That's why I'm surprised you took the trip because we haven't discussed any of the indicators. What were we discussing before? We are just only talking about momentum. So you took that trade. So again, that's why you only got $7. I mean, that's not
Yes,
even
good.
worth a trade. That's called micro scalping. If you were doing that on a live PA, they won't even allow that.
Uh, Copy, coach. Thank you.
Um, yeah, so let me see here.
So we all made mistakes on the assignment. Sorry, coach.
What assignment? The assignment was about momentum.
Uh,
There was no assignment about trading or entering
uh,
trades.
oh my God.
So here, understanding momentum, we talked about the Keltner channel, right?
Uh-huh. Yes, coach.
And we talked about the MACD, but we didn't. And another thing we're going to talk about is about the moving average. We never talked about how to enter the trade.
Okay, coach.
Who's this? Who's this? This one.
That's still me, coach.
Uh,
All below it would be Ivan now and the others.
okay, I haven't made 580. Now I don't know what trades he took, so I can't really judge it
Yeah.
because it's not marked here, so I don't know. Yeah, even though you make 580, baka chamba lang yan. If I don't see, if I don't see the trades, I'm just gonna
Mm,
say, okay, you guys were just lucky.
mm,
Because here I
coach.
can't tell. Okay, what did you enter?
So we'll turn on that marker that
Yeah,
okay.
so I wouldn't know. Okay, this is Ramil's run. What is this? Okay, retrace. I'm assuming this is Ramil's retrace, run, retrace, run, retrace, run. Okay, consolidation, then the run. Okay, Ramil got it right that he did before. He's a new student. Oops. So he did pretty good there. I mean, easy if you can just do it like that. Usually like Karen, when she was taking my class, she had to do 10 each of them, even Leia. So that's why she's good at it. Let me see here. Why can't I just get out of this thing? There we are. What else? So we're going to be talking about right now. We just briefly talked about what last week we talked about um understanding momentum. You know how strong when there's momentum, when there's strong momentum, when you can see the run is long. Like for example, right here, this is strong momentum right there. Okay, that's how you gauge momentum. Now we briefly talked about the Keltner channel. The Keltner channel, basically, if you looked at your chart, is basically you bring that down here. There's three purposes of the Keltner channel. It frames price. It frames price because it is what we call a dynamic indicator. Why? It adjusts to the momentum of the market or the volatility of the market. The stronger or yeah, if there's more volatility in the market, the wider the Keltner channel becomes. Yeah. When there's low volatility, the more narrow the Keltner channel becomes. So that's how it frames price. Now we also use the outer bands. We use outer bands also as what profit targets. For example, you know, right here, you could have entered right here, right off that reversal. You could have entered that second bar. You could have entered the break of this where you see the BOS. You could have entered there, and you're gonna. So I'm trading the regular E-minis here. So you could enter here. Target would have been outside here, the top of the band. So there would have been $20. That would have been $20 micros. This is $200 on regular E-mini. So it would have been a $20 trade for the micro, which is good. That's our target, $20 per contract. So if you're trading 4 contracts, that would have been what, 2, 4, 6, $60. And then what would you do? You'd repeat again from here to maybe another $20. Because you see this, we get a higher low. We can either this reversal candle, take it right here, or the break of that, and then take that until you get what? Until you get another $20 right there around here. You see, when you take this trade, it came back down again, but your stop is here, so it's far away from your stop. It's just creating higher lows. So yeah, then we in the trade. So that's how we use these outer bands. The Keltner, that's how we use the Keltner channel. Usually when we're outer, for example, here, this is already telling us we're already out on the outer bands. So when you see this 21 EMA, once that slope starts reversing, like now, the slope is no longer up. It's now kind of going down. Now you know this is going to go from here to where? The mid band or possibly the other side, the lower Keltner channel or the lower band of the Keltner channel. This is the upper band of the Keltner channel. You see this once you see the yellow band starts. You see this, we had an up angle. Now we have a down angle. Most likely, price then will go either to the mid band or the other side of the Keltner channel, which it didn't. And so what happened is it got here, came back to the mid band, and then I would have taken the trade. If you want to be conservative, you can take the trade when it pulls back. For example, pulls back, comes back down, and then comes back up. Your entry would have been here. And how much would that have been to the outer band? Let me see. Did you get to the outer band? Oh no, this is the current price right now. So here, you can either take in trade right here and looking for the outer band, which let's say up here, that would have been at least $60 per contract. This is where price is right now, and most likely it's gonna try to test this right here. So that's how we use the Keltner channel. Now we enter most of our trades when it bounces off the mid band. Okay. I don't like to enter trades out here. You can, but it's like saying this is already overbought here. And in this case, this had been, it was in the lower band is oversold. So when you're oversold, you're looking to see that most likely it's going to come back, which it did here. See, now we're kind of oversold. See what happens here? And then comes back to the mid band. Now it keeps coming down. And then it gets oversold again. This whole thing right here is oversold and pulls back into the mid band.
Coach, do you keep your stop loss fixed or do you move it as the trade progresses?
Well, that's a good question. So I start off with a 50 tick stop loss. Now, I don't trade the opens. Okay. I don't trade the open because if I traded the open, I usually have that wide open around 100 tick stop loss. You got to let it breathe. That's if you're trading the open. But during like the London session or like the afternoon session, I leave it at 50 ticks. If it hits it, it hits it. Or sometimes I move the stop at the most current swing, the most previous swing.
Thanks.
I just had to get some water. So like, for example, here, you see this, we pulled up, this is the mid band. We pull back into the mid band, we bounced off right here with an entry. Stop would have been here. I don't know if that's 50 ticks. It can be less than 50 ticks or it can be more than 50 ticks. For me, if the swing is more than 50 ticks, I'll leave it as 50 ticks. Again, it depends on the time, the session I'm trading. I'm trading the morning session, like the opening, the first 30 minutes, I'm leaving that 100 tick stop loss. Okay. Or usually, like I said, it's the previous swing. You enter here, the swing being down here, there's my stop right there.
So would you still use 24 Ninzarenko at the open? So it moves
Yeah.
so fast.
Yeah. You just have to get used to it. Yep.
Okay.
That's why I don't ever trade. I don't trade the open. It's too wild. They don't know where to take it. And then it's very erratic. I'll wait for maybe an hour. What I do, I'm trading what we call the um initial balance. So wait for that to form, and then I base my trades on the initial balance or on where they want to take it. Initial balance is more of a more advanced strategy. Um, but it works. I mean, the basic strategy is really composed of three strategies in one. It's basically the initial balance, the golden right here, the golden thing. I think that's it. Yeah, the golden thing and the what we call the protected highs and lows. Now, if you guys know what the protected highs and lows is, the triangle like that, it's basically saying once you break this swing, it's going to be like a protected high. But why would I want to protect this when you see our momentum or our trend is the upside? So this is more important right here. See, it breaks this BOS breaker structure. Most likely it will protect this high, this low. Why? Because it's creating higher lows because the trend is up. Whereas right here, no, like here, it's gonna break here. Now, I was down as much as $2,000 on this is a PA. I made it back to 275. Again, based on this. Now this one, you see they're gonna try to break this HH, which, most likely they will by one tick, and I don't know, they may bring it back down. I base everything on this or above the 0 line. So that'd be a good trade, but let's see if I take that,
Order filled.
right? So I'm taking a two E-minis on here. I'm taking it for 20, what is it? $200 each contract at $200 take profit. Now my risk is here 500, but I may want to increase this to down here. Again, depending on how this is moving. And that's why I like trading about the pre-market. Right now it's considered pre-market. Why? Because it's so slow that you can see and actually see how the market moves. Instead of during the um, morning open, I mean, it moves so fast you don't know where it's going. Okay. Why did I take this trade? I could have taken it. This could be a late entry, which is true, but the more probability entry would have been right here. Or it's closer to the mid band right here. And then what? If you took it right here, your target would have been, it's either one of here, let's say right here, right? Your target would have been right here. Because they don't know, I don't know if it's gonna break. So that's at least 165. $165 trade. Now, if you see this break right here, now you're gonna wait, you can take and wait for this break and enter the trade that way too. Again, it doesn't matter. So let's say you took this trade, you got the 165, and now you're gonna wait for this to break, let's say here, right up here, and take that trade to maybe a target out here. Or whatever the $200 of the 20 or the 50, 40 ticks is, right? But why did I take the trade? Because first of all, I'm going long because what the trend is up. I'm not going against the trend, and our momentum is basically still going up based on this. You know, it kind of broke. Yeah, it did break the top there by one tick, and that's what they usually do. They start bringing it back down. Now, my stop, there's a stop right here because there's an 8 shell there, so there's basically another swing there. You can have it right here. If they're going to continue this trend, they're going to continue making what higher lows. They continue making higher lows and higher highs. They barely made this higher high, so basically one tick. It didn't register here, right here. It didn't register, but these other ones are showing registering as higher highs. So you're getting higher highs and higher lows. That means your trend is to the upside. Okay. Now, why did I trade this? Again, look at your checklist, right? The 55, which is the blue line here, or the blue and the teal, it's combination. This is the mid band of the Keltner channel. Why? Because most likely you'll be taking trades when it bounces off the 55, the mid band, or when it bounces off the 233. Now you'll also see here, what is this? This is the trend indicator. If it's green, you're not going to be looking to take it short. This indicates a trend, a strong trend, right? So we break here. Now, would I be taking this short? You can, maybe just to scalp it, maybe, for 20 ticks, but I would for high probability, I would wait until I see another long entry, which this one is not long, but you see we're above the 233 and we finally came back up again. To take this initial one, you could just wait for the pullback and then what? Another reversal up. You're gonna take it right here. You'd still be going right now. Why? Because your stop would have been down here. And you see it's going up. You guys have any questions with that? Again, that's what the checklist says. The 55 is above the 233. The 21 is above the 55. That indicates high probability to the upside. Now, I wouldn't be taking a long here if the yellow line is below the 55, but still above the 233. Then, you gotta wait until this 21, which is a fast. Okay, out of these moving averages, I have 3 moving averages here. The 21 EMA, which is the yellow, the 55 EMA, which is the mid band of the Keltner channel, and the 233 EMA. Usually the 233 dictates the trend. The 55 dictates the mid band of the Keltner channel. And the 21 really is just showing you, if it's a strong trend, we're riding that 21. But as the 21, which out of these three moving averages, 21 is the fastest one. The second fastest would be what? The 55. The slowest one would be the 233. But if you're looking at this long term, I'm going to be riding this 233. Why? Let's say you entered the way down here. You could easily took a swing trade. See, this whole thing right here is basically consolidation. Why? Everything is flat. Look at this. You have close to the 230, the 55 is close to the 233. There's no slope. It's just flat.
Mm.
So if there's no slope here in the 55, that means most likely it's just what? In a range.
Consolidation.
Yeah. So what happens here? Once we break above here, now above the 233, you see this? We don't have to take that first push. You take the pullback, you get the reversal back up. There's your entry, or this is going to be your entry. You could have crept on writing this. Why? We're above the 233. Look at this. You could have kept on writing it until it gets back to the 233. But you can see, where are we? We're still above. Look at that. You could have been writing this all along because we're above the 233. And this one keeps you in place, which is another, like I said, this is got a trend indicator.
Copy, coach.
Another thing, the MACD, what we did discover the MACD. Right now, what you want to be concerned about, as long as the the MACD is above the zero line, that means that's good long. If you don't want to be taking a long position, and this is down here below the zero line, that indicates that it's now below the. Usually, when you crosses, it crosses at the 55. That's when it indicates this. That's why pay attention where the price is. If it's below the 55, it's usually below the zero line. When it crosses right here, right there, it crosses the 55. Now you can see it's going up. This one barely, it just bounced off the 55 and continue going up.
Mm.
That clear?
Clear, coach.
Yes,
So,
clear.
so always pay attention at the slope of the 55 or the midband of the Keltner channel. You can see every time we're on the outside, that's kind of telling you right now. That's, we're overbought. When do we see a change? When do you want to get out of the trade? When you see this, when you see the 21 EMAs no longer pointing up, plus what? Plus you have the price below the 21 EMA. Note that the price now is below the 21 EMA.
Mm.
Here, price was not below. It just it
Uh,
what we
It
call
goes.
we pierced it, but we didn't get below.
Mm.
Yeah, maybe this one right here did, but what did it do? It didn't continue going down. And I wouldn't be taking this short anyways. Why? Because we're still above the 55. Because most likely, in all likelihood,
Target filled.
it's gonna bounce off this 55 and go back up. Oh, there. Now I'm really good. 665 in profit. See, I don't worry about if it's gonna stop because I'm when I take this trade, I'm already know I'm with the trend and the momentum is up and I just place the trade. I don't need to worry.
Mm.
So when you take a short, it's the opposite. What's the opposite? If you look at your checklist, what? The 55 and the 21 EMA has to be below the 233. So where do you see a short? Right here. See, we're above here. What are we seeing? We're seeing lower highs, lower lows. Buying broke down here. I could have taken a trade right here. Right here.
This the sample of the short code.
Yep.
Mm.
Or you gotta wait it until the 55 is below the 233, which would have been the pullback into the 55. That's your ideal one right there as well. It's pulling back to the 55. Your stop is above here. Yeah, you wouldn't, or even if you want to put your stop here, right
Mm.
there, you wouldn't have been touched. This is your down indicator. You're just following that down as well until we break maybe right here. Or we remember what I said. Once we price this and we see the fifth, 21 is now going up instead of down, and your price is above that, I would have gotten out.
Okay.
On top of that, you already above the zero line on here. Yeah, I'd be writing this. Well, you see, once we get this, we get a pullback. Now, yeah, you could have gotten out here as well. And then re-entered when it pulls back, comes back down here. See, now we're below the 21 again. Both of them. This is just basically pullback and back up. You could have entered here. Could have entered here with the break of the swing right here. So that'd have been a good trade coming all the way down. Because now you're below the zero line here. You're still below the 233. The 55 is below the 233. The 21 is below both the 55 and the 233. Clear?
Clear, coach.
So I already gave you the settings for your
Yes.
right? Do you
Yes,
have it?
coach.
Say that again. Which
You,
settings are
you,
you talking about?
I'm talking about the ATM settings.
I don't think I have the ATM settings.
Okay, are you trading MNQ or MNQ?
Well, I was going to actually ask you on a 50,000 prop account, what is your recommendation?
I know there's two. I mean, some people before when I began or when the when the market was kind of really volatile, I'd be trading MNQ.
Right. Yeah, I was just concerned about NQ and risk management.
Yeah, to tell you the truth, the only time I'm trading good MNQ because I know how to like right now. This is the PM trading is 150K,
Right. Right.
which gives me more room for mistakes, right?
Yeah.
Because it's like a $5,000 drawdown, whereas
Ah,
the 50K it's only what 2,500.
yes.
You just make a couple mistakes on a one E-mini, then you're done. Like I
Yeah. Yeah.
think,
That's why I had been, doing MNQ.
yeah, that's what I prefer.
Yeah.
So what you
So,
do, it allows you for a bigger stop. So that's like I said, here is the M and Q. So let's say you're just beginning. Let's say I start off at maybe 2 to 4 contracts, and then
yeah.
start scaling in as you're
Yeah.
riding that trend, right? So my settings here. So I have different settings here for M and Q, depending on what size So for let's say there's one for two, and I base it off. This is what I usually base it off on. This wait, let me see if I can edit this. There we are. 50 tick stop loss. I have two
Yep.
targets, right? Because what I can do
Yeah.
when it enters this, I can right click and extend the other target. Okay. I can use the
Yeah.
other target as a runner. Okay.
Yeah. So
So
you let your second run.
my second run is it's the same. So this is
Yeah.
what I do usually, and I don't know if you saw what I did here. Let me do on a sim. I'll show you what I'm talking about. Man, this is still running up. Most likely it's going up to here. Well, let's see. See now, here's more advanced. I'm looking at my deviation levels. That's the reason why. This is why I look at this right here, right here. So yeah, this is well. Yeah, we're well above this thing. +1, +2, plus 2.5. This is +3. This is when you get back here. You're looking for it to reverse pretty soon because this is really these are deviation levels, and
Right.
I like to play these deviation levels going from here to here. Would have been a good trade. Anyways, um, what I do here is basically this in terms of
Those are
uh,
the deviations of the VWAP.
yeah.
Yeah.
So there's a an advanced strategy that I teach my students. It's called SIYL. Stay in your lane. That's basically uh, incorporates the deviation levels here. This is 1 + 1 +1.5 +2. Down here is the VWAP. Right here is the VWAP. And right here is your -1 and your -2. And that's how I see either those are targets or those are where uh expect them, for example, this, look at the slope going up. I wouldn't be taking it short no matter what until I see it below. Like for example here, right here. So it's already going down. This one most likely go test the other sign. So you have the -1 here or +1. It got down to here. That's the furthest it got, which is what we call there. It finally tested there. So, and that's how usually the pattern is when you know what VWAP is. They go all the way down to the VWAP, they bring it up to the +1, and then they bring it back down to the -1. So I know when I'm looking at these levels, if I'm entering here, I have several targets. It could have been here, down here, or down here. Those are all deviation levels. Okay, so that target, so here, let's say this is my, oh, here, let's say this one. I'm gonna put this on sim. So I'm be trading on this one. Okay, so this is NQ, regular NQ, but it has the same principle. So let's say I take a long here, right?
Order filled.
There. So that's what it shows, right? So what I can do if I want to have a runner is right click here. See this? Target one, target two. I'm going to extend target two, make it increase the price so I can bring it up here. So now I have a runner here. You see that, Ed?
Yeah, I got that, coach. Yeah,
Okay.
thank you.
Yep. So you do the same thing with M and Q. Oh, this is going to be a winner too. Okay. That's how I can manage these two. That's why I like it to have two targets. I can either have at one target, or let's say the market is just not following through. I'll just let that hit target, the two targets there, or I can make one as a runner if there's a strong trend. Okay, but typically the settings are stop loss is 50 ticks on a pre-market or even the Globex, what I call the Globex session. My target is 40 ticks. Now, as the New York
Oh,
Open, when the New York Open opens up, now my target is 50 ticks. So now I have 50-50. I don't know. Vince, he's the guy who's what we call the $1 million day trader. His thing is he basically his stop loss is 50 ticks as well. And he doesn't move
wow,
it. He doesn't move it. He's more of a defensive trader.
that's great.
He doesn't want to, he wants to risk less. And if it hits, that hits. And you like football, Ed?
Yeah, I
Yeah.
do.
So this is the way his what you call it, how he relates to the stop loss. So let's
Right.
say the quarterback is being rushed, right? And so if the quarterback, instead of staying in the pocket, he starts getting out of the pocket and goes further back.
Yeah,
That's actually the same thing as moving your stop loss.
right, right.
You'd rather stay in the pocket and take that hit, take that loss.
Yeah, makes total sense.
Yeah. So because a lot of people are really their pride. I said I don't want to take that loss. They're scared of losing. But losing is part of trading, and the successful traders are the ones who manage how to manage their losses.
Yes.
Okay.
Yeah, got it.
So now since you already know the entries now, so I guess you guys better start. You guys can start practicing. But I want to make sure again when I did this, what did I show? Make sure you go here. You don't have if there's so much if you take so many trades that you have these writings that are all over the place. Like for
Hmm.
example, right here, then just take out the writings that you can do. Wait, I'll show you right there. I'm still in this trade. See that?
Right.
Show me the entry. It's eventually gonna show me where I'm gonna either get stopped out or I'm gonna take a profit. It's gonna show there. It takes the target. It's gonna say target. It says if I hit my stop loss, it's gonna show stop.
Right.
And if you don't want that, then you just can just do this. So I can see at least where you guys entered. So you can do just the markers only. There. So it shows there's that arrow. There's your entry there. Still, I haven't closed it straight out. So I'm waiting for the other arrow. So that's my entry right there. So at least I can tell where you guys are entering.
Do you typically place limit orders,
Yeah,
or do you ever enter
yeah. Good
on a
question.
buy bid or a
Yeah,
sell
yeah.
ask?
No, it's a market. That's what we call market right here. Market buy or market sell.
So,
Especially, especially for NQ. I mean, Q because it moves so fast, it doesn't matter,
yeah,
right? Because if you do
okay.
like, I don't know if you saw my video
Target filled.
earlier today. I did a limit and just went through my limit, never filled my trade.
Oh, wow.
Yeah.
Okay.
See that because because NQ moves so fast, or even M and Q, it just go right through
Right.
that, right? So if you really want to get in the trade, you can do a market trade or market entry.
Right.
Market entry being here, buy and sell. Just these two buttons. If you're going to close the trade, close right here.
Right.
Okay.
Yes.
JR, you get it? Questions, JR? Is he still here? Oh no, we have 6. Oh, we have Ivan. Oh, they're Johan.
Coach.
Yeah.
Sorry. Yeah. So I got it, naman, coach. I think I made mistake on
Well,
on
yeah,
submitting the assignment.
yeah.
The
So,
the assignment was, so what I did is, for all of your videos, I'm transcribing it,
uh,
so I could go back to it. So
yeah,
when I check my transcription right now, I saw that, yeah, the assignment was find the momentum.
yeah,
Yeah,
yeah.
so
No, that's
yeah,
okay.
my thought
Well,
on
no,
that. And then again, just to some thoughts on the fear trading, no, coach.
no,
So I
no.
think
Well, no,
it's a
well,
little bit
so,
advanced na.
no, no. Here's the thing. For beginners, yeah, you gotta be,
Yeah.
and especially beginners, you're gonna be scared of losing. And I don't know what that's the mentality.
Yes,
And the
coach.
thing is, losing is part of trading. Take the loss. I mean,
Yes, coach.
and
Copy.
I always tell my traders, this system is actually pretty good.
Target filled.
It's very consistent. But the thing is, sometimes the market doesn't move according to how the market structure moves. And if you see you're making a high probability entry and you still get stopped out, don't say that the system doesn't work. Always trust the
Yes,
system
coach.
that you're trading. It's usually the market is off. Because if
Right.
the market is not if the market is not honoring the market structure, then no single uh, system will work because it's that most systems are based on market structure. And if it's not honoring that basic market structure, then everyone's going to be losing. So I
Yeah.
always tell my I always tell my students, if you're if you're going to learn a system, it doesn't have to be mine, it can be somebody else's. And if you don't trust the system, why trade the system?
Yeah. No, coach, I think my fault was not knowing exactly the indicators. That's it.
Yeah,
And then I didn't even know where to go to buy or sell, but I was just following the videos. As you know, like every time that we did a lesson, so I've put it on one computer, then the other computer is
yeah,
on. So I just try
yeah,
to see and go back and like rewind. So that is, I even tried to do it on a playback simulation when you were,
yeah,
because I wanted to see, uh will I be able to see what coach was seeing, something like that. And like for what you discussed just now with Ed, in this video I'll transcribe it again. So those deviations, we're not yet there yet. So now
no,
we
no, yeah, don't, yeah,
yeah,
wait. So yeah, you guys don't have deviation. So what you're going to be basing it
yeah,
on
there you go. Yeah,
is going to be this.
yeah, just the basic
It's
indicators.
it's
Yeah,
basically the Keltners.
yeah,
You know,
yes.
once you get out of here, expect it to either come back to the mid band, right? It did here, and if it
Hmm.
does come in the mid band, and you see a reversal bar going up, take that trade. That's a very high probability entry right here.
Copy,
Especially
coach.
if you're going with a trend. Here's, you're going with a trend, you see this trend here is green, you're above it, you're above the 233. That's a high probability entry to go further, and you don't do that. You could enter
Yeah.
right when you see that reversal bar, maybe 1 or 2 bars after that reversal bar. Entered there, outer band,
Hmm.
easy $435 trade or $43.50 per contract on the micros, which is still good.
Coach, how do you do that? That thing that you do when you see the how much will be that contract?
No,
Like,
here
is
you
it
have
a setting?
no. Do
Ah,
you have it here? Your
yeah,
ruler.
yeah,
Here,
yeah.
go
The
to your
ruler.
ruler. So
Uh-huh.
use this ruler and just click on there.
Yeah, like that.
There. Now
But
it
it
says
didn't
here. Oh
show us
wait. So
the
yeah. So this is how you do it. This
yeah,
shows you how many points that is. That's 26 points. So
yeah.
what you want to do is right click,
Right
right
click.
click, properties.
Okay.
It's trying to
Uh,
show. Hold on. There. So this one, see this price? Put
Yes,
this
coach.
as what? Currency.
Ah,
And then what you
all right.
do, template, save this as, if you want to keep that consistently, save that as default. So go here, save, and save as default.
Okay, coach.
And so now I did that. So that 26 points equals what? I know it keeps on doing this. Yeah. And my ninja is acting up. So you'll see there that 26 equals what? Since it's there, $520. See that?
Yes, coach. Yeah. We'll try to practice that again.
So like I said, this basic strategy based out of, well, three, you don't have the IB yet. No, that'll come later. I don't want to get you
Yes,
guys
coach.
confused. You see the
That's right.
golden, these are the golden numbers or whole numbers. You can use whole numbers. You see these whole numbers? They can be also targets. Somebody was asking me,
Right.
how do you use the numbers? Well, I use those as confluence. When you have the outer band there, when you have the outer band, look at this. Outer band is right confluent with the whole number. That would have been your target.
So
Mm,
if this closes above the 23, it looks like, I mean, above the 21 EMA, it would be a valid trade, but at that time, the MACD looks like it won't have
Yeah.
crossed back over
Oh
the
yeah,
zero
exactly.
line.
Yeah, exactly. You would not be taking long. So this one, you see now price is below the 21 EMA. Once it crosses this, it broke this swing right here. Now you know it's going to be going down.
Yeah,
How
but
far down? Ah, go ahead.
what I'm asking, Coach, is if price closes back above the 21 EMA, it's prices above the 55, but it hasn't yet crossed the zero line. Do you always wait for a cross the zero line, or
No.
if
First of
the
all,
EMAs
yeah,
are lined up, it's okay?
yeah. If the EMAs line up, especially the slope. Like I don't want to be
Okay.
sitting there and the price gets above the 21 EMA, but it's still sloping down. I still
I
wait
got
until it goes up. But you'll know the patterns when the more you trade this pattern, you'll say, oh
yes,
well, it's above the 21 EMA, most likely it's gonna go up, and I usually take a trade right there. Because as you know, the MACDs are always what lagging.
right.
So I'm just when I trade, I'm looking at the price action rather than the indicators. I'm looking at the price rather than the indicators. The indicators will follow. See, like what was happening right now. See, now price is going above the 21 EMA, but we're not quite above the 55. It still may bounce off the 55 here and come back down. So I want to see get above there. Okay, now because now we're close to the zero line, then I would take this trade. What is it, sim? Okay, I'm gonna wait for another one. It broke that. See that BOS? So
Order
I'll
filled.
take that trade. At least for a scalp of what 40 ticks. Because this, I don't know if it's gonna break this on this swing here, but I'll definitely get my 20 ticks. Now we're above the zero line here, and we just wait. Again, this may come back down, but you know, right now you see the slope of the 21 EMA, it's still going up. So again, what is the 21 EMA? That's the yellow dotted line, dashed line. Not the dotted line, but dashed line. Now let me see this. Now it can come down. Let's see. And I wouldn't be going down. I wouldn't close it out yet. Why? Because we're still above the zero line. Most like it's trying to come back down here. And what it did was, remember I said don't take that first initial push when it goes above the mid band. Most likely it's going to come down here and then go back up. Now what do you do here? You're going to wait for the reversal bar. On this one I don't have my. Let me see if I can have it here. What is this? Ninja Trader, Ninja. Status. Which I don't have. On the scale. Nope. I don't know why I have that there. I'm still calculating. Still calculating. Wonder why it takes so long. Let me see what it did here.
Target filled.
Oh, there it did. Did I show that chart? See, look at that sim. How many trades did I take? I'm already up 1,000. Here, that's the one. So there, it hit that target. It got up to that swing, and now what did it do? It basically pulled back. So our target was around right here. You got it. It's going to be a double top and start coming down. You remember I showed you, well, why do I say that? Well, we're already overbought. Well, how do I know that? Because of this other chart. We're above the +2 deviation already. This one. This is already close to the +3. You can see now, what do we do? So we do have like a double top there. Now it looks like it's going to try to come down. But you just watch what's going to go on with this MACD. It still has some, it still has some momentum to try up to the +3. But, as you know, it hardly 2% of all trades gets up to the +3. Or the -3. You can see now it's already coming down. Any questions, guys? Answer your questions? Ed, you're good?
Yeah, coach, it's a great system. I look forward to trading it.
Yeah.
I love it.
Yeah, thanks. Just practice, see what you see. Again, not all systems are 100%.
Right.
It works, just if it's ranging, you'll know when it's ranging. If you're hitting there, getting the, the what we call the is it if you're doing valid entries and you're still getting stopped, take a look back and see, is it in range?
Right.
Sometimes markets, especially now, sometimes they don't follow through. Maybe they'll give you the 44 tick or the 40 ticks or the 50 ticks and they pull back right away. That's happened to me several times where I said, okay, it's not allowing me to get further than just 40 ticks or 50 ticks. I'll take that. I'll scalp it for that. Okay. JR, you good? Ivan, you're good?
Yes.
Yeah,
Yes,
thank you
coach.
so much.
Yep. I'll upload this once it gets done up recording, and after that I'll upload it. Again, if you have any questions, submit it into the room. And if you want to let me look at the trades you take, again, make sure that I can see where your trades are and I'll tell you how your trades are.
Uh,
Okay, coach.
Coach, I'll send my trades.
Okay.
after this.
Yeah.
Yeah.
Thank you,
Okay.
coach and everyone.
Thank you,
Take
Ed.
care.
Thanks. Bye.
Thank you,
Bye
coach.
bye.
Coach.
Yep.
No assignment for next week.
No, just do your practicing. Since you're
All
already
right, coach.
since you're already practicing trading, you might as well do it.
Okay, coach.
Okay.
All right, coach.
Okay. Bye bye.